Good morning. We will pay attention to the cost price of fixed assets today. Fixed assets, for example, land and buildings, furniture, equipment, vehicles, machinery, are recorded at the historical cost. That means the price that you originally paid for this asset. The historical cost is the cost that was initially incurred when the asset was purchased and includes the following: the cost price that you paid for the asset, any costs that you had to pay to get the asset to the location where it is used, for example, import duties, delivery costs, cash handling fees, etc. The cost to get the asset into a working condition so that you will be able to operate the machinery, for instance, you will have to pay installation costs. If you buy computers, the network will have to be installed. So all those expenses that you pay to be able to use your asset will form part of the cost price of the asset. So all the costs that you paid when you bought the asset are capitalized so that you will show the cost price as the purchase price, cost to get it to your premises, and the installation cost. Expenses that you pay after you started using the asset cannot be capitalized as part of the cost price of the asset. Therefore, repairs and maintenance that's paid after the asset was used will be recorded as an expense. The purchase price, which is the price which you would have paid for the asset on the purchase date, is recorded as the cost price of the asset. If the entity is registered as a VAT vendor, the VAT that you paid when you bought this asset will be recovered from SARS, so you can claim it back from SARS, and will not form part of the cost price of the asset because you are getting that money back. The cost price will therefore exclude the VAT that was paid when you bought the asset. If you receive any trade discounts or cash discounts when you purchase an asset, you will deduct this from the purchase price before you determine what is the cost price of the asset. No entry is recorded for the trade discount or the cash discount. The reduced price will be recorded as the cost price. On the 1st of March, Errol Stores purchased a delivery vehicle on credit for $180,000 and paid $10,000 delivery costs to get the vehicle from Durban to Mpumalanga. On the 1st of June, so that means it's 3 months after you bought the vehicle was serviced and you paid $14,000 for the repairs of this vehicle. The cost of the vehicle will be $190,000. That is the $180,000 cost price plus the delivery cost. This is the cost to get it to the location where you will use it. The cost of the $14,000 to service the vehicle will be recognized as an expense. If we record these entries in the general ledger, the vehicle account will be debited on the date that the vehicle was purchased, $180,000, indicating that this vehicle was bought from a creditor, and we paid $10,000 for delivery fees, so that will indicate that the bank was credited, so the total cost price of the vehicle will be $190,000. The repairs that we paid is $14,000 and will be recognized as an expense in the books of the business. What did we learn? Depreciable assets have a limited useful life. So after a certain time, you will not use this asset anymore. So you have to write off depreciation in the time that you use it. The historical costs will include the purchase price after you deducted cash discount or trade discount and the VAT. So no VAT and no discounts must be included in this purchase price. Any cost that you pay to get the asset to the location where you will use it, and any cost that you paid to get it into a working condition. Trade discount and cash discount must be deducted before you record the purchase price because it will not form part of the purchase price. The input VAT that we paid on the asset will be claimed back from SARS and will therefore also not form part of the cost price of the asset. Any expenses that you pay after you started using the asset will be recorded as an expense.